What's up, guys? It's Mr. Fit to Flourish, and I get a lot of questions on what advice I have as a trader for beginning traders. So, for beginning traders, I'm just going to dive right into it, okay? The first piece of advice that I have is that you need to understand that there are two major reversal times in the stock market, 10 a.m. and 11 a.m. The biggest one is 10 a.m. So, I personally don't advise that you trade before 10 a.m. Just because that's when a lot of institutional orders are being placed. The market's going up and down and up and down and sideways, and you're not going to get a good setup. Now, I've documented these setups, and when they happen, the best setups typically happen between 11 a.m. Eastern or 10 a.m. Eastern Standard Time and 12 p.m. Eastern Standard Time. Okay, 9:30 a.m. Eastern Standard Time to 10 a.m. is not a good time to put on trades as a beginner. You're going to get cooked, and a lot of the time, whatever direction the market is going in from 9:30 to 10, it's going to reverse right at 10 a.m. So just be on the lookout for that. Understand two major reversal times, 10 a.m. and 11 a.m. Eastern Standard Time. The second piece of advice that I always tell traders is you need to understand what setup you're looking for when approaching the market. So before the market opens, you need to know what your setup is and what you're looking for. So when the market opens, you can't just be like, oh, okay, it looks like this is going up. I think I want to take this. Or it looks like this is going down. I think I want to take this. It doesn't work like that. That's not how trading works. The way that trading works is you back tested something that happens not frequently, but something that happens. When it happens, it gives you an edge. So what that means is when it happens, it's a high probability that the trade is going to go in your direction. So for instance, if you think that the stock is going to go up and you're buying call options, then you're probably going to be right. Or if you think the stock is going to go down and you're going to buy put options, you're probably right. How do you know you're right? Well, your setup comes on the chart. So what is the setup? So for instance, if you see something like a double top neckline break is a good setup. So you see a stock shoot up, comes down, creates a neckline, shoot up again, and then when it breaks below that neckline, you're going to buy puts. I just gave you a setup. So let's say that you don't trade. You're going to come to the market opens, and you're like, oh, I don't see it yet. I don't see it yet. And then all of a sudden, 12:30 p.m., you see the double top and we break the neckline. That's your setup. Well, go take it. Okay. Do not trade unless you see your setup. I highly recommend this. A lot of people are like, oh, I keep losing trades. Well, I'm like, what's your setup? I don't know. I'm just trying to get calls. I'm trying to get puts. You're not trading. You're gambling. You need to have a setup coming to the market. All right. So getting that out of the way, that's probably the most important one. Having a setup, back testing that setup, knowing what the win rate is, and then coming to the market, understanding that I'm not trading unless I see this setup. That's how you stay consistent. That's how you stay profitable. Okay. Number three thing that I would recommend for traders and a good piece of advice is you need to know your bet sizing, so your port sizing. So what does this mean? This means that every time that you put on a trade, you need to know how much you're going to put in. I know a lot of people just try to pay attention to my callouts and my watch list, and it's all good and stuff. But the problem is you don't know how much to put in. You don't know how much I'm putting in on each trade. Not every trade is built the same, okay? And you know that there's some setups where you're like, I don't know about this one. Obviously, you're not gonna put too much in that. And there's some setups where you're like, yo, this is so easy. Why doesn't this happen every day? I'm gonna bet the boat. I'm gonna bet the ranch on this one, okay? So there's different setups, and you need to grade your setups. How do you grade your setups? Well, you're gonna have to look at the history of charts. You're gonna have to back test. The way I back test is not how everyone back tests. You can do strategy back tests and all that, but what I do is I document on the charts what's happening, and this is after the market closes. I'm looking at just charts that formed previous days. I look at different days charts on the 5 minute time frame, and then I grade certain entries. So I'm like, I probably would have entered here, and I grade that entry based on how many pieces of evidence show that my trade would be correct. Okay, so based on when the market's open, based on what the grade is of the trade setup, that's how much money you should be putting in. So for instance, an A plus setup, put your whole entire bet size in. So let's say you usually the max you would put into a trade would be like $5,000, or let's say $500. So the most you would put in a trade is 500. Well, that's your A plus setup. Put 500. If it's a B setup, then you want to put like 300. Okay. If it's a C, then it's not going to be the best. Just put $100 in. Okay. If you're following someone's call outs or a watch list and you don't know if it's going to work or not, it's automatically considered a C setup. Okay. Don't put a lot of money in it. unless you've been following this trader forever, you trust them with your life or something. I don't know, but I wouldn't just go off of someone else's trades. And if they are trading and you're watching them daily, you need to figure out, you need to reverse engineer why they took the trade or ask them directly. So for people who ask me, I tell them exactly why I take trades. And it's going to be the same reason every time. Why? Because I have one setup I'm looking for, one or two setups that I'm looking for. And I can literally repeat that strategy every single day. So if someone just followed my trades, you'll know exactly why I'm taking them, and you can reverse engineer that, and you can win. Okay. Another piece of advice that I would have for traders, beginner traders, that a lot of people just keep asking me all these questions. Another piece of advice that I would have is to create a watch list. Okay, create a watch list. What should be on your watch list? Well, number one, you need to have blue chip stocks. Why? Blue chip stocks are high volume stocks. Okay, they're high volume, so you know that you're going to be able to put on a trade, and you're going to have someone else on the other end of that trade. I don't recommend trading penny stocks. Like, people keep asking me about these penny stocks. They have no volume. If you don't have the money to put into a penny stock, which is like millions or hundreds of thousands, you don't need to be trading penny stocks. You're going to get manipulated out of trades, and you're looking for an instant fix. Okay, blue chip stocks have large volume, and they're consistent every day, and their behavior is consistent every single day. So that's what you need to be looking for: stocks with consistent behavior that are repeatable, and therefore you can repeat your strategy for success. Okay, so create a watch list of blue chip stocks, number one, and then also stocks with high volume, stocks that are in play. So currently, AI stocks, tech stocks, crypto stocks like Coin, Mara, MSTR, those are in play right now. So stocks that are in play need to be on your watch list. You need to practice back testing and charting on those charts, and just look at setups on those charts every single day, and keep just a basket full of stocks that you trade. So like 3 to 5 stocks that you like to look at. You go back and mark up the charts every single day, and you know how those charts behave. And then all you need to do is just use your one strategy on those 3 or 5 charts. Okay, that's all you need to do. Keep that watch list and keep it going. Rinse and repeat. Okay, the last thing that I would have to leave with you guys for today would be, okay, the number one thing that I would leave with you guys is that all you need to do to win is to keep your winners bigger than your losers, which means you need to keep a tight stop loss. Okay, the rule in trading is to trade with the trend, but also, and that the trend is your friend, but also that you need to cut your losses quickly. You have to cut the losses quickly and keep your winners bigger than the losers. Okay, and what I meant to say is that good trades just go. So if you think it's a stock is going to rip to the upside, and you want to get in on the trade, but then it goes down, and then it comes back up to the original spot, and then it starts going down some more, and then it gets below the previous bar, it's probably not a good trade. Good trades typically just go. If you have a very good setup, it's just gonna instantly just moon. Okay, instantly gonna go. So good trades just go. So just remember that good trades just go. Do not trade before 10 a.m. if you're a beginner. Wait for setups. You're not gonna have something set up immediately from the first 30 minutes of market action. You're not going to. So wait for a setup. Have that setup, that edge that you use. Repeat that every single day. Make sure you're documenting your trades every single day. Understand that good trades just go. Yeah, all this is pretty good stuff. The last thing I wanted to actually say, because I want to give you guys as much piece of advice as I can. The last thing I wanted to say is, don't listen to other people's opinions about the markets. Make sure you're reading on facts and history. Look at history. So a good trader to follow is Mark Minervini. He actually breaks down the history of stocks, their fundamentals, their technicals, their PE ratios, all that good stuff, and he looks for historical data. So whenever you're trading, look for data, which means the charts. What are the prices on the charts? What is the history of this stock? What does it tend to do based on these technicals and the fundamentals? Okay, don't listen to someone who says, "Oh, no, you're wrong. This is gonna go down." And I did this the other day. Like I put watch lists on TikTok, and someone was like, "Oh, you're wrong. Like this is gonna go this way," and I was like, "Oh man, am I wrong?" Like I looked at the history and it always does this, and then I was right, and I didn't take the trade because I listened to someone, but never listen to someone who isn't where you want to be, okay, in life. So if they're not $1 million trader or the U.S. champion, don't listen to them. So I'm not, I'm definitely not listening to anyone ever again because I am sure of myself when I trade, and I've been trading and documenting things for a while and looking at historical data, but that one thing got in my head, and I was like, dang, am I wrong? Like I've been looking at this, and then I didn't take the trade when I knew where it was going based on historical data, and they were just like one of those people who's like, oh, GameStop to the moon type of deal, and I listened, and I was right. I was like, oh my gosh, I'm I'm not listening. If your name's not Mark Minervini or or any of the best traders, the U.S. champions, I'm not listening to you. I'm sorry. No offense, I'm not listening to you. Um, but I'm gonna do my own research. So always do your own research. Reverse engineer the best traders. Reverse engineer winning strategies, and I promise you, you'll do well. So that's all I have for today on this video. A lot of stuff, a lot of good advice. Please pay attention and backtest anything I'm saying. Backtest all of this advice as well, and I promise you'll do good. It's the Fit to Flourish podcast, and I'm out.